Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because although it may not feel like it, Bitcoin is still holding support here. And sentiment is somehow this fearful with Bitcoin still trading above $110,000. Now, we do have to be honest with ourselves. This isn't the most bullish chart in the world. Bitcoin is holding on to support for dear life, and we have these ugly wicks to the upside as investors took profits aggressively above 120,000. But I do think people calling for a cycle top here and a bear market immediately are jumping to conclusions a little bit too quickly. Bitcoin is still holding its 20-week moving average and still well above its 50-week moving average, which has been our macro support this entire cycle, as well as 2021 also. So I wouldn't be surprised if we actually saw Bitcoin catch investors off guard by bottoming here at 109,000, and I'm open to it coming down and retesting the 50-week once again, but I don't think that has to happen for Bitcoin to make new highs here. But it's clear that this sideways chop is making investors more and more concerned based on what we're seeing here from the Crypto Fear and Greed Index. We see something very similar with the spot ETF inflows. They've been relatively flat in terms of inflows and outflows as Bitcoin has been chopping sideways here. And it's actually crazy just how perfect these ETF inflows are at representing investor sentiment. If you look at our biggest outflow day since these ETFs went live, it happened to align perfectly with the extreme greed we saw during the tariff drama. And if you look at the last time we had extreme greed on market sentiment, that was also the record high we saw on ETF inflows, showing us how important sentiment is when it comes to market and how sentiment driven even quote unquote institutional investors are when price is rallying aggressively or dropping aggressively, causing them to FOMO in or panic sell. And this is exactly why this week's free weekly report was called Fighting the Fear. I know sentiment is fearful right now, and these corrections always have a risk of going lower, and there are so many people calling for cycle tops and crashes. But instead of trying to predict exactly what's going to happen, I think it's important to focus on support and resistance levels and to always be prepared for multiple outcomes. And one of the main reasons why I believe it is quite unlikely that the cycle is already over is because so far this topping pattern has been almost identical to what we saw in 2021. So either these are the laziest market makers ever, or many people are going to believe this is the cycle top just to be wrong and watch Bitcoin make new highs. But whether we end up having the final push scenario where Bitcoin enters price discovery very shortly due to rate cut excitement, or the full reset scenario where Bitcoin spends a lot longer consolidating and shaking out investors, will come down to what the Fed decides to do and whether they decide to prioritize the labor market and ease more aggressively than the market currently expects, or if they decide to prioritize inflation and remain stubborn with rate cuts. I do believe the Fed's monetary policy decisions are going to matter more than seasonality here. So although I know September is usually red and October and November are usually green, I'm open to that happening again. But I do believe that the Fed is the main driver of markets right now, especially with the weakness we're seeing in the labor market and the beginning of this new easing cycle and how aggressive they decide to be. So I expect volatility to continue here in September as we get closer to that FOMC meeting. We do have an important inflation print coming up next week. Is it going to come in hotter than expected and make it difficult for the Fed to ease as aggressively as it needs to fight the labor market weakness? Or is it going to come below expectations? We're going to have to see how the data comes in, and I expect it to have an impact on what Powell says on September 17th. So what do we actually do about this? We know there's many paths the market can take, and it's pretty difficult to predict here because we don't know what the Fed is going to do on what time frame. We know they're not going to let this entire debt-driven global financial system collapse. So all we need to do is survive the volatility and see this long-term trade through. And my favorite way to do that is by being conservative when Bitcoin is very far from its 200-week moving average, and being aggressive the closer it is to its 200-week moving average. As of right now, we're in the expensive region, so Bitcoin isn't cheap by any means if you're looking at a 1 to 3 year time frame, but it's not super cheap either where I'd be piling money in here to hold long term. So in terms of my portfolio, no changes this week, just sitting on my 30% cash position and my 70% spot holdings. plenty of upside exposure if we end up getting an extended cycle, but plenty of cash to navigate volatility and risk if the Fed ends up taking longer than we currently expect to ease and cut rates. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program and community in the video description. But for now, we have Bitcoin holding above its previous range high, which is a good sign for the time being. It's struggling to get back above the range low that we just fell below. So we're kind of in no man's land between our most recent range and the bigger range that came before it. And based on which one we end up breaking into, that likely sets our short-term trend and will give us a clearer picture of what comes next. And speaking of what comes next, we have MicroStrategy trying to hold on to its 50-week moving average for dear life here. We really want to see this hold if this cycle is going to continue. We know Strategy is a big player when it comes to Bitcoin's price because Saylor was one of the main buyers of Bitcoin this cycle. So ideally, we want to see Strategy maintain the 50-week. Again, we only have one data point last cycle of it breaking the 50-week and the entire market going into a bear market. So that doesn't have to happen the same way, but it is definitely a variable I am watching out for. Many people use Strategy for Bitcoin exposure, so weakness in Strategy could be an early warning sign of what's to come for Bitcoin, so we'll continue monitoring it. And on almost the exact opposite end of the spectrum, we have Ethereum still trading way above all of its major moving averages, so some consolidation here would make a lot of sense. We know it's very normal for Ethereum to put in even 30% corrections back to its 20-week moving average. Something like that here wouldn't surprise me. I still believe Ethereum is heading to higher prices. I don't believe we're going to see a double top at just under 5K to end the cycle for Ethereum. I think it's going to go low enough to shake out most investors just to make new highs once those investors have given up because perhaps they bought it pretty high and struggle to sit through a 30% drawdown, which is very standard practice for Ethereum. We're probably going to have the range mid and the 20-week moving average lining up at about 3,400 very soon. It's nice to see that these corporate treasuries are still accumulating more and more Ethereum. BMNR is still sitting on $600 million in cash that will perhaps be used to buy more ETH. Same thing for the Ether machine sitting on just under 400 million. So I do believe this Ethereum corporate treasury narrative has more room to go, but we have seen a slowdown in ETF inflows, now seeing some outflows for these Ethereum ETFs. But every time we have seen outflows, that has marked a local bottom for Ethereum. Is it going to be the same way once again? It's hard to know. Probably depends on what Bitcoin does. But I do believe that these ETF inflows and outflows are a great sign of investor sentiment. And we are seeing a sentiment reset after everyone was celebrating and piling into Ethereum over the past few months. It's not surprising to see a little bit of a rotation back into Bitcoin here at this major pivot level, which has been resistance so many times. It has also been support so many times, and it's where we have the 100-week moving average. This is our last major resistance level before the 0.5 Fibonacci retracement, which is my target for this cycle. So we'll continue to take it week by week, but I do expect Ethereum to outperform Bitcoin for the remainder of the cycle. As for Solana, still slowly grinding its way higher here and consolidating at the range high. It does look like it wants to continue its upward trend. Also looks quite solid on the Bitcoin pair, struggling at the last major resistance level. You have all the major moving averages here. You have the previous range low here. So as soon as we're able to reclaim that, I'd expect a big move from Solana against Bitcoin, especially with the ETFs around the corner. So we'll see what happens. For now, I believe things are looking quite good for Bitcoin, Ethereum, and Solana, and what comes next is likely going to depend on where Bitcoin decides to hold support. Is it going to be the previous range high, or are we going to have a deeper shakeout to the previous range mid and 50-week moving average? Only time will tell. But the longer term trend is still looking pretty good. The global liquidity index continues to grind higher, and we know the Fed is going to have to ease aggressively. It's just about surviving long enough to be able to see that through. We know the dollar index has been going sideways for a while now. I do expect this week's CPI and this upcoming FOMC meeting should have an impact on the dollar. We just need to see what the Fed ends up projecting at that meeting. Right now, the projection is 1, 2, 3, 4, 5, 6 rate cuts over the next 12 months. Of course, that's going to change a ton between now and then, but the market will be watching that inflation data very closely and that Powell speech we have on the 17th, because we know the labor market is starting to weaken quite quickly, and it's very hard to break that momentum once it is underway. So I do believe the Fed needs to try and get ahead of it before it gets out of hand. But the only thing stopping them right now is inflation. So we'll see what Powell says about the inflation data and whatever we end up seeing from the CPI next week. We know growth is still positive. We know the markets are still near all-time highs. So we'll see what the Fed decides to do based on this dichotomy of weakening labor market and stubborn inflation, and which one they choose to prioritize, because that will be the main driver of risk assets over the next few months. But as we look forward, the federal government is still running huge deficits, and we are now 7% ahead of the previous fiscal year. This trend seems to be worsening year after year. Exponential debt growth means exponential money supply growth as we debase the currency, which should put upward pressure on our risk assets like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.